Hi guys, this is Kerns and this is the lesson 5 of this class. This is the first part. We're gonna talk about market psychology. The video that you're about to view have been recorded I think 1 year ago, and then there's not a lot of change about it, so you can definitely go ahead and use it for now until I update new ones. Hi ladies and gentlemen, this is Kearns and this is the second section of the class, the crypto swing trading class. And then in this section we're gonna go over some basic principle about market psychology. As I like to start every section, the quote of this section is, "As long as we live in a world where my expenses are your incomes, consciously or not, we are all traders." What I mean to say is that at some point you have to trade something to make a living. Some of you guys are trading your time, your talent, your skills, and we traders, we choose to trade in financial market, and then we choose to trade instrument. This is a different kind of trade, but this is the same mentality. It's like we are living in an environment in which we are acting based on financial transaction, in order to make money out of it. So this is one of the things that I like to say to those people who like to ask me that question. As a trader, the money you are making is, anytime you're winning money, is because someone else is losing it. Well, what I like to tell them is there is nothing new about that. Every time you're losing money, someone else is winning it. Anytime you're paying interest over any kind of loan, someone else is making it. This is the income of someone else. And anytime you go paying the bills, and those expenses, obviously they are the salary, the income of someone else. So we all traders, believe it or not, we are doing nothing new, and then we don't have to feel bad about it. Okay. Point A. We're gonna go over the reason and why people fail at the trading field. The thing is that there is one thing that people need to understand. Actually, there is no educational system in the world that prepare you for what you're gonna live in the trading world, that you're gonna live in the financial market. If you decide to go for the trading profession, what you learn in class, it's different. The first thing I want to go over is freedom. Every single system that prepare you guys, if you went to school, college, university, basically they are preparing you to be slave of something. You are a slave of a certain boss, a certain job. In the trading world, believe it or not, you are the one making the rules. Nobody is asking you to buy or to sell anything. You decide to do it. Nobody is telling you how much you should buy or how much you should sell. Nobody tells you when you should trade. You decide to open the computer, you decide to spend how many time you want in front of the screen. You decide to how much capital, most of the time, in particular in the crypto trading world, you decide how much capital you wanna start, and you also decide if you're a good trader or not. It's based on your goal. And the reality is, there is no system in the world that prepare you to be free. And because you're free, and because you can do whatever you want, and that's how you attract financial disaster in your trades. Reality is, most of us, when they fail because they don't play any kind of trades. My trading game changed when I understand that I cannot face the market without a plan. The reality is the market will, as soon as you put money on a trade, or as soon as you have money on the table, you start thinking differently. It's the same thing when you get your paycheck. Anytime you have money in your pocket, suddenly you start making expenses that were not planned. It's because that money can, for the great majority of us, money can change the way we think, the choices we make, and nothing is different in the trading world. So when you're trading, what happens is that if you don't have any plan and you have the obligation, that's your role, to make your own plan. If you don't have any plan, the market will plan for you, and most of the time the market will take whatever you have, and this is where you get disaster. And the second point is, sometimes people, traders, they don't really trust. Even though they have a plan, they don't really trust it. The reason why is that some of them, they go ahead and read some books and be part of certain group, and then they go ahead and trade the plan of someone else. There is some good point about it. The point is that most of the time, those people, they are selling you a system that is probably already work, because that's the reason why they are selling it. But if you choose to trade the plan of someone else, the point is that, and whenever you're gonna have a mistake, because mistake is gonna happen, it's gonna be difficult for you to learn from it because it's not your plan. And suddenly you will find yourself in a situation when you're not trading that plan. And this is one of the most difficult things. Third point is FOMO. Stand for fear of missing opportunity. Sometimes, you just be part of the crowd, price is going up like crazy, and that's the moment you see so many people that don't have any kind of financial trading education. They start buying and they follow the fear. Everybody's selling, they go crazy and start selling, they start losing money. And then there is the point is that in the trading world, you are not here to follow people leads. You are here to build your own. As a matter of fact, you are here to find who you are, what works for you. Yes, you can go ahead and read, you can go ahead and study different kind of other well-known trader styles, but the reality is you are here to find what works for you. I like to say that you are here to build your own kung fu. And the third, another point is position size. This is a big problem, particularly when you're bring you to that trading world. Well, let me go to the whiteboard and let me go ahead and explain a little bit what can you do. For an example, as sometimes how amateur fail, and this is one this is also in correlation with the fact that you don't have any plan when you are trading. Okay, so we talk about position size. Position size. Okay, position size. Generally, when the new trader without plan, and again I said, they go ahead and start trading. Let's say that for every position they start trading $100. First trade, it's a win. Okay, first trade, it's a win. They manage to make, I don't know, 3 to 4% and whatever it is. Second trade, it's another win. The reality is that, let's say that you have a 10K account. What's gonna happen is that when you don't have a plan, you don't know why you're winning, and worse, you don't know why you're losing. What's gonna happen is that most of those time, those traders will increase their position to, I don't know, $1,000, and then maybe the third might be a win, but the fourth one will be a loss. The human behavior is, anytime you have winning trade, you tend to take profit as soon as possible, because it's same reason, because of the fact that the educational system that we have in every single country in the world is here to help you take as soon as you can. And because you've been trained, your mindset have been trained like that, you tend to take profit too early. Anytime you have a winning trade, and when you have a losing trade, what you're gonna do, because of the fact that once again the system have been prepare you to be hopeful when everything is going wrong, instead of just take the loss and accept the fact that you're losing, you're gonna keep your position a little bit longer, and this gonna keep increase your loss. And if you keep repeating this again and again and again, that's how your balance move from 10k to $0. So what I want to tell you is that you need to go into that world with an open mind. As a physician, I have to forget everything that I know to learn a different game, a different world, because the trading world is about self-control, and that's the reason why you need a plan, because plan can only be evaluated based on result. So let's say that you have your 10k capital, and then you choose the plan A, and then you try the plan A, let's say 20 times. After 20 times, you can go ahead and evaluate what happened, and you're gonna see what works and what didn't work, which is totally different when you just keep following the clown, and then you start losing money for a reason that you don't know, or you start winning money and then you fall to believe that it's easy. And that's how, before one year, every amateur, they lose everything they have. So I like to say this to my student: in the trading world, failure comes because you have the power. You decide. Obviously, that's the reality. You are the one deciding. If you go, you apply for any kind of jobs, before even you start working, they tell you what you have to do. How many minute break you have per day, how are you supposed to give per weeks, and then how much you're gonna get paid, how much they're gonna take for taxes, and all those kind of they are setting the rules for you. In the trading world, you are the one who's supposed to set the rules for yourself, and you have not been prepared for that. So the only reason why you were losing is because of you. Obviously, it's because you can. Another example that I like to take is the fact that, for an example, anytime a lot of people, they don't like insects. Personally, I don't feel threatened by them, but some people, they just, anytime they find whatever it is, they go ahead and they kill it. The reality and the truth behind it is, you're doing it because you can. Most of the time, there is no real danger. There is no imminent danger. I mean, we're talking about danger, actual danger, but you kill him just because you can. For some reason, there is a false sentiment of scare. I can say you can feel scared about that, but you kill it because you can. Because if you cannot kill a certain, let's say you find a big snake in your house, you're gonna call 911. You're not gonna call it. You're not gonna try to kill it yourself. So the same thing happened in the trading world. You tend to do stupid decision because you can. There is no, they did not, because you can go ahead and read books, but you choose to observe them or not. And that's the problem. By the time you understand how it works, you might not have any money to continue the journey. And then that's the problem. You need to understand that the market is not against you. It's not gambling. No, it's not. The point B is, this is where it's extremely important to have to understand the psychological burden that comes with trading. If you ever try to trade, then I'm gonna try to ask you, did you remember your first trade? In the beginning, trading looks very easy. As a matter of fact, it is easy. But when fear, greed, and hope get into the game, this can get you blind. This can, change the way you think and your judgment. So basically, what we are doing as trader is, and particularly traders that are using technical analysis, I only trust the chart. Your job is to shut down everything you feel, your emotion, and get into your opponent mind in order to get his money. Well, this is not different from any kind of business in the world. Trading is a real business. It's not a game. It's not you gonna go ahead and think you can win just because you have two buttons, a red and a green button. In the trading world, and particularly when it comes to technical analysis, everything works, but just not all the time. So often young traders, they start trading without any kind of coaching or without any kind of good plan and then they find a particular strategy, or they find that brand new indicator, and they start trading based on that. 1 trade, 2 trade, good. 3 trade, fine. And after that, they start having some sort of loss. They didn't take the time to learn from it. They keep trading. They revenge. They go ahead and they do what they call revenge trade. They keep losing money. What happened is that the market, everything you can go ahead and read a book, learn about a particular strategy. Nobody is lying to you. It's just that sometimes it doesn't work. So you should be prepared to learn when it gonna works, and if it's not working, you stay away and wait for your next move. Wait for your trading plan to open the opportunity for you to make money. And so often that's probably one of the most difficult things to accomplish when you are a new trader. Okay, so the point is, the reality is, in the market there is only 3 sides. There is an uptrend, it can be an uptrend, it can be a downtrend, and the market can be sideways. And the market it's like if the market was a car, the market would only have, let's say that the sideway would be neutral and moving forward, moving backward. Nothing more, nothing less. There is no kind of, different kind of speed, all those kind of things. It's 3 simple sides. Obviously, it's 3 simple sides that makes people lose money. 3 simple sides that make people get in rich. 3 simple sides. All you have to do is to be right every time you take action in the market. They look simple, but the thing is that people, like I said, they tend to complicate their trade. Like many traders said, I'm pretty sure this is not the first time you heard that. You should keep it simple and stupid. Those are not my words. So because the market only have 3 sides, basically you only trading. The reality, you only doing 3 things. You are buying, or you are selling, or you just stay away because this is not the moment. Every single trading strategy, every single plan has a gap. You need to know when it's not gonna work, and then you stop trading and wait for the next move. Well, I need you to understand that this is specifically for swing trades. Okay, rules might be different for different kind of trading, type style, but for the purpose of swing trading, sometimes, and guess what, it's extremely important to know when to stay away, because if you're forcing the market, you might lose every profit you ever made from the previous trades you made in the market. The point is, I told you that this is a real business, and then what you're doing is that you should think that you are building a casino. A lot of people use this example. I'm just using the word, but I'm gonna use the whiteboard just to give you an example. Let's say that your trading plan your trading plan, whatever method you choose, whatever indicator you choose, whatever it is, everything can work. They just don't work all the time, but everything works. So your plan is to win 50% of the time. You can go way higher than that, over time. I mean, after 2-3 years of experiences, you can go way over that. But let's say that you are conservative, you're very conservative, and then you just want to win 50% of the time. And in order to make money over time, you need to, because you're gonna, for an example, you're gonna trade 10 times. So I'm gonna put the wins on green. You're gonna win 1, 3, 4, 7, 8, and this is 5. Okay, and then you're gonna lose money. The second trade, 5, 6, 7, 8, 9, and the 10. So because you're gonna win 50% of the time, what you can decide is when you are winning, how much you're gonna win, and when you are losing, how much you're gonna lose. The thing is that only in the trading world, this is not in the gambling world, and this is why trading, there is absolutely nothing. It's absolutely not the same thing. When people go ahead and say trading is gambling, well, if you can decide how much you can lose, this is not gambling, because you're gonna use probably thinking in order to increase your balance over time. So let's say that every time you trade $1,000, and then you are risking $1 to get $3. Okay, so let's to keep it simple, let's say that every time you take a $1,000 position size, for every $1,000 position size, for every win you make 3%. Okay, you make 3%, and every time you lose, let's say that you choose to lose 1%. So your wins are 3%, and your loss are 1%. This is the beauty of trading. You can decide. Do not let the market decide for you. That's what happened with young traders when they are new to the game. They let the market take whatever they want, and then you go over that 1%. You can choose whatever you want. Later on, we're gonna go over risk reward and money management. We're gonna detail this, but this is just for the purpose of probably thinking, just to make you understand. So what happened is, you are trading the same position size. We're not gonna increase it. Remember, even if we are trading good, even if we are trading bad, we keep the same position size for 10 trade, and after that we're gonna evaluate. What we do is that the first time was a win, you make a $30. So that was a win. First trade, you make $30. Okay, second trade you lose money, and then third trade, it's always 3% every time, so you make another $30 and another $30. We could just write down 30 times 5 just to make it more easier. So this is gonna be 7 and the 8, 30 and 30. Because you can decide how much you can lose in the market, anytime you lose, you're gonna accept only 1% lost. So anytime you lose, you're just gonna lose $10. You're gonna lose $10, and again $10, 9 and 10, $10 and $10. So what's gonna happen is that your win gonna be $150. So at the end of the round, at the end of the set of 10 trades, you're gonna win $150 minus your loss of 50. So at the end of the trade, you're gonna have a positive balance of $1,150. That's why people like to say that it's all about making money over time. Trading is not a quick money scam, those kind of things. Yes, you can make huge, the potential are huge, but you need to understand this is not a quick money. We are not here to make quick. We're not here to make quick money. I am sorry. If it's what you're looking for, then you're in the wrong place. So that's how they call put the future stats in your hand, or you can say that you're gonna put your destiny in the end of the stats, because over time you're gonna make money. You're just gonna need to focus on the ratio of wins versus losses, and then over time your balance will grow, and there is no limit in this, and this is the beauty of it. This is why there is nothing similar to gambling in this thing. So but I always said this is not a quick money scam. So yes, you're gonna have a lot of pain, and most of the time it takes 2 years to be good at it. Why? Because I said it, you're not prepared for what you're gonna live in the market. You're not prepared for the amount of emotional shift that's gonna happen when you're trading. So because of that, you need 2 years. The learning curve is 2 years. At the beginning looks easy. After that, because you keep losing, and then you don't shut down your emotion in order to learn for your mistake over time, some people, and most of the time, they do not manage to survive for that 2 years without financial disaster, because they don't have any kind of trading plan, or they don't have any kind of they don't have any goal, they don't have any coaching. And this is why we are insisting in the coaching thing, or find a trading in which you can be part of. Why? Because you need to be around traders that went over the learning curve, because this is one of the most painful experience in the trading career. And then the reality is, some people will tell you need to go on some trading some demo account. You can trade on use demo account to trade. I personally believe this is not gonna work. People talks a lot about demo account. Let me just go over them. Demo account. I don't think demo account will give you what you take. They might give you some reflexes about how to place orders, platforms, this kind of thing. But what you don't have in the demo account is the emotions, the emotion part. Because you're trading in a demo account, you're not losing real money when you're losing, and you're not making real money when you're making. So the confidence you might be building in demo account might be a false confidence. You know what I mean? So, and you might not face enough emotional hit, we can say, in order to compare your trading game to the real world. So that's why I think emotional demo account, yes, they can be useful, but you cannot compare your performance just by using the demo account. You need to trade real money. You need to trade real money in order to get really into the game. So a lot of people ask, should I pay for training? What if I decide to take the road alone? Personally, I didn't pay for any trading. That's why it was very painful for me. But I know some people who did pay the training. Well, they managed to lose less money, but the experience is still painful. The pro and the con is, if you choose to do the road alone, if you choose to do the trip alone, you might not make that 2 year survival. You might not survive for 2 years in this deadly market thing. But the beauty, I think that if you choose to do it alone, and then you are a real learner, you will learn for what works and what didn't work for you. And when you get the message, you just get it once and for all, because they're gonna be the rules that you experience yourself. They're gonna be you're gonna have what they say, your haha moment, and then your trading game will be your own trading game. This is gonna be your kung fu. So it both, if you choose to go in the trading, I am not referring people to any kind of trading, because that wasn't my experience. I don't know what that is, but if this can limit your loss in order to make your experience more happier, then maybe you should do it. But if you're not a avid learner, if you don't have the kind of focus that require that you stay alone and learn, because it's gonna require a lot of study to make it to a very good trading game. So if you're not that type of person that can go ahead and do things by yourself and learn a lot by yourself, then you should question yourself: are you really ready to get into that deadly profession, that deadly career? Okay. All right then. Feel free to subscribe. Remember to subscribe.